Appreciate all of you all being here today. Wow, what a great morning. It has been just awesome to hear these speakers so far today. I loved Jonathan Turner's conversation about compliance is not a destination, it is a journey. And that is so true in today's world, especially in this pandemic that we're living in today. So today I'm going to talk to you about fortifying compliance with a strong CMS. And that is, if I can actually navigate my technology here. I always include this slide because it reminds me of the fact that Saltmarsh celebrated their 75th anniversary last year. And what a great feat in our industry to be around that long and to be serving our clients as trusted advisors for that many years. We have over 150 professionals. We have 5 offices, and you can see all the different services that we offer. And we have clients in varying industries throughout all the different businesses that we serve. So excited to be here and to talk to you all about CMS and compliance management program. When I started researching, just getting ready for this presentation, I started thinking, fortifying, what does that really mean? And especially in today's world and what we live with today and the unprecedented times that we're living. Fortifying. So Cambridge English Dictionary says to make something stronger, especially in order to protect it. And after listening to Sandy and Mark and Brad just a few minutes ago about all the compliance traps that we're living with, strengthening and protecting our CMS in today's world is even more important. And the theme throughout all of the dictionary definitions for fortifying is strengthening. And then one favorite was what dictionary.com said, to increase the effectiveness of. And so you would have thought that Jonathan and Mark and Brad and Sandy and I were all coordinating our presentations today because we all have the same theme, and that's effectiveness throughout the presentations. And so we didn't, but it all worked out, obviously, because it's all what's on everyone's mind at this point in time. So my goal today is to provide you with some type of takeaway that can help strengthen your CMS. And most of this is just going to be reminders on really what do you need in your CMS, and especially in the world that we're living in today. So what is compliance? Well, it's the act of following the rules. It's the act of following what the regulation states. But it's not only what the rule says, but it's also what do your procedures, what do your policies say, what are your guidelines within your organization? Remembering that compliance is not just the compliance officer's responsibility, but it's the responsibility of all the team members. Most effective is when it is embedded in those responsibilities for each position within your organization. Compliance management helps us understand what are our compliance responsibilities within our organization. It helps our employees also understand that. And how does that requirement, how does that work into your everyday life? It helps us review our operations so we know how those responsibilities are being carried out, how those requirements are being met. And then last and finally, helps us also direct that corrective action. And how do we update materials, such as when all of these things happened in March and you all had to start, we have to figure out a payment deferral program. We have to think about forbearance. And we have to think about the policy and procedures and how does that actually work for our institution when a good portion of our staff were remote. So you all, I would love to be able to see all of your faces and just say, you all have done an job with just navigating these crazy waters that we're living in. And just to give you a little encouragement to say, continue the communication, continue working with your staff so that they know what is the best way to serve these customers, these consumers that a lot of them are living today without jobs, without just all of them being in this scary time. So moving in, we're going to talk about the definition of culture, how its inner working is with compliance, and then probably last and final, we're going to talk about a change management process. Every regulator that I reviewed, as far as looking at their exam procedures, requires a change management process. I think it's probably a good thing, obviously, with everything that we have been dealing with in the last couple of months. So we'll just talk through that a little bit and talk about some of the suggestions, some of the things that actually the Federal Reserve was probably the one regulator that I found the most information on as far as a change management process. So let's talk about the components of a CMS. Of course, first and foremost is your board and management oversight. We'll kind of delve into that in just a few minutes and talk through all of that. And then your compliance program. And these two interdependent control components work hand in hand. This is actually from the CFPB's exam procedures, but FDIC also has the same set of exam procedures in their own side, and they add one other element to this, and that's the compliance audit process. But when these different control components are working well, and this is a complete quote from what CFPB says, an institution should be successful at managing its compliance responsibilities and its risk. When there's a weakness, obviously, then that can also end up with violations of those consumer protection laws, but also what first and foremost is most concerning is the associated harm to the consumer. Way back in 2014, I guess maybe FinCEN had a little bit of a, maybe some foresight in this already. And we're working through with this from the BSA AML side. But their quote in this FinCEN advisory, regardless of your business model or your size of your institution, a financial institution with a poor culture of compliance is likely to have shortcomings in your BSA AML program. Well, you can just insert compliance in there as well. Because if you don't have that culture of compliance throughout the organization that is working interdependent with these components, then you could have some definite shortcomings in your compliance program as well. So just wanted to find out, what does Merriam-Webster dictionary say as far as culture? Well, I love this because it says a shared set of attitudes, values, goals, and practices that characterize an institution or organization. A set of shared values, conventions, or social practices associated with a particular field, activity, or societal characteristics. Both of those definitions ring true in the culture of compliance. This is actually a quote directly from the Assistant Attorney General with the Department of Justice. And this was in regards to another industry, not actually the banking industry. But he was pointing out that a company's senior executives and board of directors must fully support and engage with the company's compliance efforts. If senior management does not actively support and cultivate a culture of compliance, a company will have what's considered a paper compliance program, not an effective one. I think we can all identify with that, most definitely. So I asked this of the group, what type of culture has been established within your organization? Think about that in relation to just what even Sandy, what Mark, what Brad, what especially what Jonathan was talking about in the process throughout your organization as it relates to compliance. Do you have a proactive and supportive culture of compliance? Or is it more reactive and lacking that support that's necessary in order to do your job more effectively every day? This is another slide that I really love. This comes actually from the insurance industry. It's not even from the banking industry, but I thought it was really great as how it shows that culture defining and moving straight down that little slide, just showing policy and how it builds on policy and procedures and audit and review and your resources and your training, and all effectively coming to the foundation, which is your compliance. So I have a great friend in the industry, Dave Dickinson, and he does a very awesome job with speaking on culture, and especially as it relates to compliance. And he uses culture as the foundation, and each one of these items building on top of that as well. I love that analogy as well as this one, because I do think that culture needs to drive all the way through each process for your organization to ultimately attain that goal of compliance and that culture of compliance. So let's drill down and talk a little bit about the board and management oversight. Obviously, the board ultimately responsible for developing and administering that CMS. So how can the board actually show and demonstrate that commitment to an effective CMS? Well, one way is to first appoint a compliance officer with that authority and that accountability. Compliance officer needs to have the sufficient authority to be able to cross departmental lines, to have access to all of the operations within the institution, and to actually effectuate corrective action when it's necessary. Some institutions actually choose to form a compliance committee that helps come alongside of that compliance officer to coordinate that program. I've seen it work very well in institutions. Mainly when I see that happening, it's when every line of business is involved in that conversation from the top-down approach, and everyone is talking about implementing regulations, and maybe there's changes that need to be made. It's a very effective conversation when everybody's at the table working towards the same goal. Another way that the board and senior management can actually show that commitment to maintaining an effective CMS is to provide clear expectations about compliance. What is our risk appetite within our organization? Showing that and demonstrating that through setting up an effective compliance program that includes the required elements, but also making sure that every person understands what are their compliance responsibilities by their role within their organization. Of course, we talked about already embedding that into a position. Every position within your organization is effective. Even the Fed and the other regulatory agencies talk about, and they spend a lot of time talking about third-party vendor relationships. But the Fed specifically says that needs to be managed just like you would manage any other business line or function within your institution. So that's embedding that into your compliance program, that vendor management piece. And remember that even if you do outsource some type of operational aspect of a product or service, you still cannot outsource the responsibility of complying with the laws and the regulations that manage that.
Connie, I wanted to chime in here if I could. This is something that we're starting to see in exam reports even. And I think back, if we were to look at the root cause of a lot of the areas of loan compliance or even deposit compliance, well, everything. I think you could see vendor management as being part of that, a big part of it, either in not understanding who the responsibilities where they lie are, or
Right.
in proper setups of LOS systems, or deposit account disclosures, error resolutions, if you've got third parties involved in that
Right.
process. You know, they say that they have processes in place and they sound good to get signed on the dotted line, but then in the implementation of it, your compliance isn't their number one concern, but it should be yours. So a good,
Absolutely.
strong, in
Yeah.
fact, we've added a vendor management review process, probably could be dovetailed with our CMS review process, but to really help banks gather those, you know, documentation, put the bow around it, ideally before you engage with a third party, but it's any point during the life of your relationship with third parties, taking ownership of that compliance piece will really help you get there quicker.
I absolutely have seen that. That can sometimes be a downfall for organizations as well, by thinking that they have no responsibility once they've signed that contract with that third party vendor. And that is certainly not the case. And have seen that probably more often than not in the Reg E world. So that's most definitely, thank you for that.
Yeah, and also thinking about with Sandy and his discussion and about mortgage servicing and third parties that are doing your foreclosures. I mean, remember back when I think it was the ability to pay rules had a big contingency on working with third parties and keeping information confidential, like your attorneys that are going to be doing loss mid and all the other larger servicer type requirements. Anymore, like even vendor management over attorneys and making sure they're up to date on all this COVID stuff and the state-specific, you know, restrictions on forbearance and foreclosures. If you're working with an attorney that sometimes also does, you know, other work, contract work or things outside of mortgage servicing, they may not be up to date on this stuff. So definitely all third parties need to be considered as part of vendor management for compliance.
Yeah. Well, and some of the notes that I took on Sandy's presentation and Mark and Brad's as well, but very specific, talking about the customer service piece and how important that is for your staff to know, especially in this time when folks are dealing with job loss and just all of the challenges that go with that. So absolutely. Good comments. Thank you. Moving in to talk about adopting clear policy statements. I think that each one of our speakers today talked about that and how yes, they're driven by the regulatory requirements, but your procedures are exactly what you're doing operationally. And so, especially when all of these things started happening in March, one of the recommendations that I think it was even a call that I listened to that Kristen put me in touch with, was just listening in to how the regulators were going to look at this information after all the dust settles after the pandemic. And the one thing that I heard loud and clear was, going into this, you need policies and procedures. You need to make sure that you're updating for the payment deferrals that you're going to do, and for the forbearance piece, and just all of how you're going to handle all of that. And your board needs to know about it. And so I think that's one thing that you need to make sure that's been well documented, especially going into your next compliance exam, because we are definitely changing in our regulatory environment, and we certainly don't know exactly how everything's going to be looked at, and especially as we think about the payment protection program loans and just how that's going to affect our next CRA exam. And so you have to think about that in the context of your policies and procedures. And I did ask Sarah Oliver, one of our managers, does a lot of just overall CMS reviews for Saltmarsh. And I asked her just kind of what's one of the top things that you're seeing as far as issues when you do review a bank's CMS or even a credit union CMS. And her comment back to me was, policies and procedures are in place, but sometimes they're not actually following that. Or maybe if they have been following that, or maybe there's a requirement in their policy that says we're going to do training by this particular date on this particular topic, it might not be documented anywhere. And so we all know that if you don't document something, it didn't happen, right? According to the examiners. So just thinking through that when I'm talking about the policies and procedures, just make sure that what you say in your policy and procedure, you're actually doing. This next item is definitely some way that the board can show their commitment to an effective CMS, and that is making sure that we allocate those resources to the compliance functions that are commensurate with the level, the complexity of the institution and its operation. And this is not only your technological resources, this includes your human resources as well. Just like Jonathan said this morning, you know, that percentage, you need to look at those metrics. If you have a 20% growth in your institution, but yet your BSA, AML, or your compliance functions are not growing as well, then you're going to have some issues possibly. So looking at all those metrics and measuring that is very important. Of course, institutions with higher risk profiles, maybe higher volumes, all of that, you can utilize those automated systems to help with that. But even at the end of the day, sometimes you need a human resource to be able to interpret all of those metrics as well. So, and of course, we've all seen where we haven't given that attention to devoting sufficient staff or maybe resources have led to breakdowns in our program, including regulatory criticism and fines and possibly enforcement actions. We've all seen that happen, and I certainly would not want to see that happen to any of our institutions that we work with. Let's drill down into the compliance program and just exactly what is necessary, what is needed in a formal written compliance program. You need to have, obviously, as we've talked about, these components of policy and procedures. You need to have training. You need to have monitoring. CFPB adds in here monitoring/audit. And a consumer complaint response process. All of that is important to have a well-planned, maintained compliance program. It's going to help either prevent or reduce regulatory violations. It's going to provide cost savings and efficiencies. And you know what? It's just good business from a strategic planning process. Policies and procedures, as we've talked about a little bit, need to match the size, complexity, and the risk appetite of your institution. Procedures need to tell what you're truly doing. And I always like to put in risk assessment, because I really feel like, how do you know what your risk appetite is? How do you know what your true risks are unless you've been through that process? So it helps to kind of identify and measure where are your highest risk within your organization and what needs the most attention. Of course, those policies, those procedures, those risk assessments all need to be regularly reviewed and updated as the institution and the business model might change. You might add very risky products, and maybe the regulatory environment changes. So at all of those times is when you need to look and see, what do I need to do to tweak these policies, procedures, and risk assessments? Let's drill down a little bit on the training. Of course, training's definitely important for the board and senior management, but for your staff as well to maintain an effective compliance program. We all say that computer-based training is pretty much what we're seeing most of the time, but face-to-face, I wish we all could be face-to-face. But, you know, in this COVID world that we live, there are ways to do it, obviously, just like we're doing today. You could do a Zoom meeting, you can do a Teams meeting, you can use GoToMeeting. just get creative. But even in all of these changes that have come this year because of just COVID and all the effects on our institutions overall, it's even more important to get in front of your team members to make sure that they understand we need to provide the best customer service that we can at this point in time. We need to address these questions, and that means compliance officers, compliance teams, you need to know what are the regulatory requirements and how can we get this out to our people so that they know what are the emerging issues and what is going on in, for example, in the forbearance world. When is that moratorium going to expire? These are all things that the front line will probably get questions about. So also in this training conversation, don't forget, compliance officers, you need training. You need to make sure that your staff and your team also has the proper training because it's all going to be looked at during your next exam. Monitoring, this is a definite proactive way for you to identify any procedural, maybe even some training gaps that you might have that will hopefully head off any regulatory violations. And I'm going to say this probably a couple of times, but including your compliance officer from the start, if there is a product that's being developed, if you're going to change your CRA assessment area, you're going to open a new branch, maybe you're going to implement a new business, a new line of business, such as student lending, and which is, for the most part, prior to March, that's where a lot of the conversations were around student lending. All of that, getting your compliance officer, your compliance team involved in that from the beginning is going to increase the success of that function 100 times better. And so I told you all earlier that FDIC is the only one that really kind of says, here's what we see as what we would consider a recommendation as far as your monitoring system. Look at your disclosures, look at your calculations, check your TISA statements. And they didn't say this, but that's what I'm reading through this, through the lines. We all know that we have system updates and it will knock out, 9 times out of 10, it's going to knock out some of the most important TISA statement information that's out there. And I can hear my deposit compliance folks saying this happens all the time because it does. And so monitoring that, checking those things, it's all going to plan for a better CMS system, overall better compliance program. Record retention, document filing, posted notices. Of course, always look at your advertising. If you can add that to your monitoring piece, it should actually be at the top of your list today, especially from a fair lending perspective. The various state consumer protection laws, third-party service provider operations. This is key. Just as Kristen said, this is becoming more and more of a exam conversation that leads to regulatory violations. And so all of that's important in your process. And then of course, just make sure that anything that's being communicated to your staff and your team members, that you've already seen that and you know that it's addressing those issues, whether it be a regulatory change or something to that nature, that it actually meets up with what the reg says, and that communication is going out and it's proper. Of course, fourth and final is your consumer complaint response program. You have to have that as an element of your compliance program. You have to handle, obviously, you need to promptly handle any consumer complaints, but procedures need to be established in how you address those complaints, and so that all of your team members understand and know, if I get a complaint at the teller window, where does that go? Where does that end up? And so they need to know what are the handling processes and what are your procedures surrounding that? And then of course your timing requirements for all of that. Compliance officer, please be involved in this at some point in the process. especially if you are receiving fair lending complaints, if you're receiving CRA complaints. All of those things are very timely and have certain timing requirements that are associated with those complaints. And fourth and final, one of the things that I think is really important is to look at those trends associated with those complaints, review those and see if there are systemic compliance problems that are coming from those complaints. And so that will help direct you kind of where you need to look within your organization and find, here are some issues in this particular area. All right, so as I said, FDIC adds compliance audit as the third final element for CMS. And this is an independent review of the institution's compliance within laws and regulations, but this also includes adhering to your own policies and procedures. This is what Saltmarsh does. This is what we do. Of course, it helps to identify any risks that might be in your program, might be in your process, maybe in your procedures, but it also works in conjunction with the internal monitoring system that you have in place. The board is really the committee, and the board of directors or the audit committee, really the ones that will be determining that scope and the frequency of your compliance audits. And so even the FDIC even went to the point of explaining what needs to be in a compliance audit report. So it needs to include the scope. Obviously, it needs to talk about the deficiencies that were identified, and a recommendation that Saltmarsh, and we actually do this in our reports, if it is known, we will recommend, or we include what the root cause might be in that deficiency, or how we found, or what we consider to be the root cause for that deficiency. I'm recommending that you also look at that as well, because the Interagency Consumer Compliance Rating System, so if there are violations of consumer harm, the examiners have to go in and look at root cause and severity, and actually how many times that has occurred within the organization, if that's actually what's happened. But when they're actually rating your CMS system, then that's one of the items that they look at is the root cause. The number of transactions that were sampled by product type and category reviewed, and then the description and recommendation of corrective action. This is important because you need to know, what is my next step? What do I need to do? And really your time frame for correction. Does that need to be corrected in 30 days or 60 days, or all of that plays into exactly how are you going to correct that violation. And then just a suggestion, next steps. If you know what the next steps are, then possibly include that if it's appropriate in that particular report. I have been spending a lot of time working with fair lending reviews in the last probably 6 to 8 months, and which I've always done, but more intently reviewing fair lending. And one of the things that I've tried to include with each review is just a conclusion. And really, if we've been criticized for fair lending, and maybe it's in the redlining world, because we all have heard conversations about redlining, then what's the next step for that institution? How do they correct that? And how do they move forward? And so seeing all of that in paper really makes a difference as far as your report. And it gives you kind of a direction of how to move forward, even knowing that you have the issue, but what do I do about that issue? And so a lot of times I've seen other industry audit reports out there, and sometimes they don't give you enough information to know exactly how do I move forward and what do I do at this point in time? So just understanding that, and ask more questions. Maybe ask your auditor more questions. Let's talk about the change management process. And we've all been challenged in this world in the last 6 to 8 months. As I said early on, every regulatory agency requires this to be part of your CMS, but it's also one of the assessment factors that they use in that interagency compliance rating system as well. They're going to look at that, and they're going to assess the board and management's response as it relates to the effectiveness of your change management process. That includes responding timely. How did you make these changes? How did you document these changes? Whether it's internal or external. Of course, we've all had regulatory changes that have affected our process within our institution. So how do you respond to all of that? And how quickly are you responding? And how is board and management supporting you in those efforts? Again, communication throughout the organization is important, especially when we are in such changing times, most definitely. Way back in 2014, the Federal Reserve Board actually put out in their Consumer Compliance Outlook newsletter just some areas, what they considered to be recommendations, obviously recommended elements for a regulatory change management process. And a couple of these I like really well. A couple of these I'm like, I'm not sure that they would work, just based on some of the items, and we'll talk about. A standing agenda item for just regulatory change. I think that's an awesome idea, especially if you have a consumer compliance committee that meets regularly where you talk about changes that are coming. We all are kind of just waiting with bated breath right now on Section 1071, for example, for that small business lending collection monitoring information. We don't know when it's coming. We've just heard it's coming in September. So those are kinds of things that you want to talk about maybe at one of these compliance committee meetings, or your compliance team meeting together and talking through those things. Here's some implementation issues that we have with this. We don't have a commercial application. So how are we going to gather this information? So just thinking through, trying to address, here's a change that's coming and we need to be prepared for it. I love this next bullet point, but in the Fed's wisdom, I'm not sure they understand exactly how a compliance department works in a community bank, but a dedicated staff to research, develop, and publish a regulatory change management newsletter. That would be a great and awesome thing, but I'm not sure that most of us have enough time to do something like that. What you could do is put out an email to your group of things that, here are things coming. Here are some emerging issues that are coming. Here are some of the challenges that we foresee in the compliance department that we're going to have to discuss in the next couple of weeks to get ready for this change. So it'd be great to have your own research staff, but I'm not sure that you all have those kinds of things. So, and then of course, a robust training system that not only shares with your staff training that you need to impart wisdom to them about maybe new changes that are coming, but also sharing the wisdom of maybe some conferences that you've been to, that you've attended. And here's some takeaways that we received from that compliance conference, maybe that you might have attended, and maybe some webinars that you've attended, all of those things to get that conversation going about compliance and how can we be more effective in the role that we have each day. And then the very last item is a subscription to a regulatory monitoring service. I'm not sure that that's even important anymore, but I do think that one of the things that I used to always do when I was a compliance officer many years ago was sign up for the listservs for all of the regulatory agencies, just to keep my eye on what was going on in their world. And so I think that might be a better serving way to do this, is just to keep up with what's going on in their world. And I know you all don't have anything else to do, but to keep up with all of the different issues coming out of all the regulatory agencies. But so my contact information is there for you. I appreciate you all being on the call today, and I don't know, Kristen, if we might have any questions that have come in today.
Sorry, I'm checking. There is a live feed going on in BankTalk about the composition of a compliance committee. Do you have any guidelines on that or suggestions?
So what I have seen has been, I've seen all different types, but the one that I've seen the most effective is line of business manager, all of the different line of business managers, along with, and this was probably the most effective, the president was on the committee. Not sure that every institution will do it that way. And then each line of business manager, compliance officer, BSA officer, and chief risk officer if you have someone like that in your organization as well. That one was probably the best compliance committee grouping that I've seen, most definitely.
Yeah, that's a lot. I mean, that's not a lot. It's a lot of decision makers, I guess I would say. And so that's helpful for them to pick in and understand what the committee is working on. Another question came in with regard to monitoring. Do you have any comments on what should be monitored at a minimum and how to document that?
So, you know, for the most part, I think if you can monitor, wow, that's a really big question when I think about it, because there are several things that you can do on the lending side, but also on the deposit side. Keeping up with your disclosures, I think, is probably one of the things that we see the most issues with on the deposit side. I know we have several banks that do their own Reg E monitoring, you know, and on the lending side, checking your ARM disclosures and checking all of your different disclosures to make sure nothing has changed. If you've had a system update, I'm trying to think through all of the different pieces. Monitoring for fair lending is extremely important in today's world, especially if you are a HMDA reporter. You know, kind of knowing what your numbers look like, maybe doing that twice a year, just to kind of see how are we doing from a redlining perspective in our MSA, in our majority minority census tracts. And, you know, there are varying differences on how often you do the monitoring. I've seen folks do it on a monthly basis. I've seen them do it on a quarterly basis. I don't think I would go any farther out than a quarterly basis, probably, because things can change so quickly.
Mm-hmm. Yeah, I think I'd concur with everything you just said. You know, the larger banks have their risk inventories identified and, you know, have key risk indicators based on the results of monitoring in the higher risk areas, whether they're riskier because of a prior exam finding or audit finding, or the complexity of the process, as we talked about on Jonathan's. So, I mean, I think really it hones back to or how often and what areas to look at derive from your risk assessment, those areas that may have either gaps or higher risk for compliance issues. As far as documentation, we've seen them all over the place, right? Like something is
Oh, yeah.
as minor as a checklist in every, you know, in every loan file, or an actual work paper that looks like something an auditor would do that goes to an audit committee, gets reported up through the channels. So it's really something, I think it's specific to each institution.
I
But
agree.
the important thing is for your auditors and really being the second line of defense, your third line coming in, your auditors or your examiners who are kind of like above the third line.
Right.
They're going to need to be able to see what you've done, and so they can scope their programs accordingly.
Right.
Anymore
Right.
than the risk-based exam procedures call for, and I know it's not always done,
Right.
but call for the regulators to determine what areas for transaction testing based on all those factors we just talked about. And so if you can hand them a program with a bow on it, this is what we audit, this is what we monitor, and this is what our auditors audit, then
Right.
that really helps them drive the areas of review and maybe keep them out of your bank.
Right. And remember, if you self-identify during that monitoring piece, then most of the time they're not going to take that to like a tier 1 or a tier 2 compliance violation. So
yeah.
It definitely will help you in the end, for sure.
I think the one thing I would just say that can get banks in trouble is the failure to follow up on identified problems. You know, and it goes back to that root cause question, is saying, you know, it's one thing to say the root cause of a, for example, deposit disclosure issue is, well, we had an update of our deposit platform, and
Right.
it did. Okay, well, why didn't you have it reviewed? Well, maybe IT doesn't let us know. Well, why doesn't, you know, ask yourself 5 levels of why, or we don't have the resources. Well, why don't you have the resources? And back to what Jonathan Turner was saying, for those that may not have been on the BSA related discussion, it was really broader than BSA, and it will be recorded, or was recorded. I highlight everybody listening to it. We've already had requests to share that with boards and other executive levels, but if your compliance program metrics in terms of resources and scopes of reviews doesn't grow in lockstep, or at least, you know, in some form and fashion related to your growth of your bank or the complexity of your bank, there's a big red flag right there.
Oh, yeah.
So I think having metrics even that relate, you know, the program and its findings, its scope and coverage and resources to the growth of the bank, or the added new products and services, or as we're getting into fintech and technical areas, having that coverage, the vendor management. I mean, it's exciting times, I think, because there's so much more to compliance than just checking boxes. There's a lot of strategy involved, but the CMS is the key of it. So, I mean, I really do thank you, Connie, for agreeing to take on this topic, volunteering it, because you know it's the root of all issues too.
It is. It is, most definitely.